Understanding the Form 56, Executor Responsibilities and Trust Management. Form 56 is a critical document issued by the Internal Revenue Service, IRS, allowing individuals to notify the IRS of fiduciary relationships. When an individual turns 18, they have the opportunity to assume the role of executor over their Social Security trust. This form formalizes the transfer of authority and outlines the fiduciary responsibilities tied to the trust. Key features of Form 56. Form 56 grants the executor authority over the trust. This includes superseding prior fiduciary relationships, canceling existing fiduciary arrangements, and establishing the executor's legal control over the trust. The effective date aligns with the individual's 18th birthday, representing the transition to adulthood and fiscal accountability. Practical application of Form 56. By correctly completing and submitting Form 56, individuals gain control over their Social Security trust. The title of executor empowers them to make decisions that directly impact their financial and legal standing. Executors often append their titles, such as esquire or occupant, signifying their formal role in administering the trust. Claiming abandoned assets through tax forms. The IRS provides mechanisms for reclaiming abandoned or unclaimed funds using forms such as the 1099-A, acquisition or abandonment of secured property, and the 1099-C, cancellation of debt. These forms are integral to asserting rights over unclaimed dividends, assets, and liabilities. The role of the 1099-A. Form 1099 is used to claim ownership over abandoned assets, such as property or unclaimed funds. Executors can submit this form to reestablish control over assets associated with their trust. This process often involves collaboration with state controllers or other regulatory bodies. The role of the 1099-C. Form 1099-C allows for the cancellation of debts owed to the trust. By accurately filing this form, fiduciaries can nullify liabilities and balance the financial records of their accounts. This ensures the trust's fiscal health and minimizes exposure to undue claims or obligations. The importance of the IRS fiduciary system. The IRS serves as a regulatory authority in fiduciary matters, ensuring compliance and proper management of trusts and estates. By leveraging Form 56 and other fiduciary tools, executors can work within the system to uphold their responsibilities and maintain transparency. Managing property and taxes. Executors often manage assets such as vehicles, real estate, and other taxable properties. By understanding the interplay between state and federal tax systems, fiduciaries can optimize the management of their estates. Tax obligations, such as property taxes, may be addressed through mechanisms like the 1099-C, ensuring compliance and efficient resource allocation. The relationship between fiduciaries and financial systems. Fiduciaries operate within complex financial systems that involve the Federal Reserve, state-chartered banks, and private trusts. Understanding the roles and responsibilities within these frameworks is essential for effective trust management. State versus federal oversight. State-chartered banks may impose income taxes, while federal banks follow distinct regulatory guidelines. Executors must navigate these systems to ensure compliance and secure the assets under their control. Recognizing the nuances of these frameworks is critical for maintaining the integrity of the trust. Leveraging trusts for financial independence. Private living trusts allow individuals to safeguard assets while maintaining control over their financial affairs. Executors can establish living trusts to protect property, manage taxes, and ensure the smooth transfer of assets to beneficiaries. Establishing a living trust. Living trusts offer a secure method for asset management. By transitioning assets into the trust, individuals protect their property from external claims and ensure long-term financial stability. Form 56 often plays a foundational role in this process, signaling the executor's authority. Advanced considerations for executors. Executors may encounter scenarios requiring advanced knowledge of fiduciary tools and strategies. This includes addressing tax obligations, managing debt cancellations, and leveraging trusts for maximum financial benefit. Working with professional advisors and understanding IRS guidelines ensures proper execution of these duties. This information is for educational purposes only. This is not legal or financial advice. We offer this information as it is presented to us. We neither endorse nor discredit it. Make your own decision regarding the content. For additional resources or questions, subscribe to this YouTube channel.